Hey, bulls and bears, welcome back to another dose of economic reality. We've got more all-time highs in the stock market. We've got oil plunging, right? Things are looking nice and pristine, just a little more than a month away from the big selection in early November. Do you feel like you have a choice in November? Are you going to be choosing between the lesser of two evils, or are you really excited that you're going to put your vote in and get somebody to make some real changes and make this a better place, make this a better country? Well, I hope you're more excited than me because I don't see too much hope on that front. But I do know that being on top of the news, the economic situation, it's going to make us better off. For those of you holding silver, for those of you invested in the right places, we're going to be very heavily rewarded very, very soon. I see silver over $1,000 an ounce here. The way that this economy is being propped up with all the debt, money creation, spending. Well, let's get into some news here. Dow Jones up more than 250 points. By the way, I'm recording this late on September 26th, so markets are probably in a different area when you're watching this video. Let's get into a few different things, though. We've got the strike looming on the East Coast, and you know how dependent we are on imports, folks. This could be a disaster. You think prices are high now? Wait for some sort of port strike to occur. A strike looms as busiest port in the U.S. At busiest port, 45,000 workers prepare to walk off job. Longshoremen Union says wage demands must be met, or members will strike on Tuesday for the first time since 1977. Not saying it's going to happen, but if it does, look out below, folks. Actually, I should say look out above, because it's going to be inflation. It's not going to be deflation. Things are going to get even more expensive, right? At a time when the Fed's cutting rates, when people are loaded up on debt, right? This could be the breaking point. If this happens now, I would think that the powers that be would not allow this to happen. Just pay the higher wages. People need it. People need higher wages. Again, you have to go back to why are we seeing record amounts of strikes? Why are so many people striking this year? Because they like striking? They like holding the signs and walking around in circles in front of their employer? No, they're not making enough money because of the cost of living. But we're told the consumer's strong, the consumer's resilient, everybody's doing fine. And now we have these inflationary forces and threats out there, like this port strike, threats of much, much higher inflation. 10 of the busiest ports in North America are at risk of shutdown next week, as a leading union warns 45,000 workers stand ready to walk off the job if industry operators fail to make key concessions. The International Longshoremen Association has accused the U.S. Maritime Alliance, which represents 40 ocean carriers, of making insulting offers to staff demanding higher pay and commitments on automation. A lot of people are trapped. A lot of people are living, as you know, paycheck to paycheck. So people are afraid to be the squeaky wheel that wants more money. People are just happy for whatever they get because they're afraid there might be not much better on the other side. If people were confident that a better job, or they could just go and get a better job, they would just walk off. You're not making enough money? Walk off and get a better job. People don't have that luxury now. There's not enough high-paying jobs. So instead of just going and getting a better job, they're going to strike, right? And they probably won't strike that long, because it doesn't take very long without pay before you have to just go back and get whatever breadcrumbs, whatever scraps you can get from the dinner table, from the big boys, right, from the big dogs. So folks, this is going to continue. We're going to keep an eye on that for you. Could it be the big thing that brings the market down? Who knows? All I'm saying is be prepared for it. If I had to put money on it, I'd say we're getting close to a flashpoint, to a crisis point. But again, who knows, right? People thought everything was going to come down in 2020, massive deflation, housing bubble going bust. Did the opposite. They threw so much money at the problem, things went in the opposite direction, as what 99% of the people thought. Look at this here. We're going to bring up a chart here. GDP, the number is out. Recent news, U.S. GDP grew at 3% annual rate in the second quarter. New data finds sharper economic rebound from the health crisis. What does this mean, folks? U.S. economy grew. What does that mean? That means people are still spending money that they don't have. It means the banks are still loaning out money, still allowing people to go further in debt. Remember, all this changed in 2008. The debt picture changed. Now, what's happening today is much different than 2008. They're allowing people to go further into debt, right? The bank said no, 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 way before this point that we're at now. Back in 2008, they said no, no, no. Again, they didn't know they were going to get guaranteed bailouts, endless life support. Now, they're pretty sure that they're not going to be allowed to fail, right? Too big to fail. It goes back to it. So, of course, more people spending money. And remember, 70% of GDP is consumer spending, right? So when consumers can't borrow more money, it's game over, right? Game over. New banking rules taking effect in October. We're going to see if that has an impact on it here, if that is actually implemented. I kind of think that some excuse is going to be flown out there not to implement that new reserve requirement, where banks would have to have actually a tiny fraction in reserves or in deposits compared to the amount of loans that they have loaned out, right? U.S. economy grew at solid 3% rate last quarter. Remember, we have government spending in there too. War. Spending money on weapons, funding wars is economic growth, right? Of course, economic growth. So think about this. You can buy a bunch of rockets, weapons, go blow stuff up, literally go destroy stuff, or at least fund the destroying, right? Maybe we're not dropping the bombs ourselves, but we're funding the destruction, wiping out cities, and that's economic growth. Wiping out cities, right, is economic growth. It should be the opposite of growth, right? It should be looked at as a bad thing, but that gets chalked up as economic growth because it's spending. We're spending borrowed money that didn't exist until they created it out of thin air. Folks, this whole thing is, I just have to laugh sometimes because it's sad. I mean, it really is sad, the world we live in here. Let's talk about rents and lack of monthly funds available for people to pay these high rents. We're starting to see the effects now. Rent moratoriums long gone in most cities. There's still a few cities doing the moratorium thing, believe it or not. Redfin, they say asking rents for apartments dropping 6%, the lowest level since 2022. Another crack in the consumer. We see what's happening with the consumer. Not much money left over at the end of the month when you look at the savings rate. So naturally, makes perfect sense, right? Rents coming down 6%, biggest drop since 2022. Monthly asking rents for apartments hit a peak of $1,889 in the first quarter of 2022. So now we're down from the peak. Again, many people would have predicted a much bigger decline, a much bigger drop in rents because of the state of the U.S. consumer. So what are these people doing? Are we being fed false data? How are people getting by with such a low savings rate? It actually is pretty amazing when you think about it. The levels of debt right now being so far, so high above the 2008 crisis. It just shows you that when people can continue to borrow more money, they can really, being able to borrow more money also helps you handle the debt that you already have. Why? Because you could do balance transfers, right? I looked through all my credit cards the other day online. If I went out and did a bunch of balance transfers, I could have like almost $200,000 with my whole credit line, right? I'm sure once I started doing a few of them, though, the other banks would see that and they would probably drop my limit. But, it's really tempting. Almost want to go ahead and take all these balance transfers out and do a cash advance. You don't get a 0% interest rate on a cash advance. And just take them out and just have the biggest party ever and then just file bankruptcy, right? That's what a lot of people do. Traveling, etc., buying things they can't afford. Student loan repayment program on-ramping ends. In less than a week, student loan services will once again report late or missed federal loan payments to credit bureaus. So now it's going to start impacting their credit reports. Will the banks drop their credit limits once their credit scores start to drop? So we have that in October. We have the new banking rules supposedly taking effect on the 1st of October. What else do we have going on? We have the BRICS announcement. And will there be a simultaneous dumping of U.S. debt? dollar-denominated debt that could really cause some disruptions. The port strike, what's that? Four things possibly that could really start messing things up in October. Again, I'm not saying it's going to happen, but look at the risks, right? There's really no certainties. There's no certainties. That's why 99% of the economists out there, the experts, said they were experts, predicting that this was already going to crash years ago. Hasn't happened, folks, right? So something big has to derail the economy, has to derail the creation of money and the way money is given out to people, loaned out. Here comes the inventory of new spec houses, the highest since 2009. Wolf Street is reporting that the buildup of completed single-family houses is a factor in resolving the price dislocations of overall housing market. So is it enough to shift the housing market? I don't really think so, because look at this chart. Tell me what we think about it. Here we are, all the way to the right here, where we were going into the financial crisis. But look here, we had to spike all the way up to 200,000 completed single-family homes with the busting of the housing market. Now we're at just 100,000, halfway where we were. So again, not anything that's going to bring the housing market down. Yes, it's going up from a super low amount of about 30,000 completed homes in 2022. It's a big jump though in just a couple years, from 30,000 to 100,000, but still 100,000 away from the 2000 where it started. 2006, 2007. Looks like it peaked out here late 2008, and then they contracted. The economy contracted. The financial crisis ensued. Then, of course, homes being built dropped, plunged, basically. What do we have here? Oil down close to $67, folks. Will it fall apart before the selection in November? You let me know. Will something happen in October to derail this economy? Or are the powers that be just too powerful with the endless money creation, keeping this whole thing propped up and smooth sailing and all-time high markets into the November and maybe even beyond? You have to start thinking about, is the inflation and keeping the bubbles inflated a bigger problem than a crash or deflation or an economic correction? I think it's worse. I think inflation is far, far worse than an economic correction. One's more scary than the other because it happens much more quickly. That would be a crash. Nobody expects it. We're going to see, folks. We've got a lot of other risks out there. I haven't even mentioned the biggest ones. World War III on the horizon. Let me just read you some of the latest here on the war front. Let's see here. Israel prepares for potential ground invasion of Lebanon. We've got everything happening over there in Russia still. So again, a lot of risks out there, folks. Just keep, stay ready. Keep stacking if you're not already stacked. Maybe you've been prepared for a long time. A friend of mine in Michigan has been preparing for kind of a economic doomsday for a long time. Canned goods, the whole 9 yards, stocking stuff away, waiting for the correction. And he says, I've been ready for a long time. Let's get this going. Let's get the ball game started here. So we'll see. We'll see how it goes here. More all-time highs. The markets, things are looking pretty good. Either way, hope you come back for more news. Make sure you are subscribed. Critical time to stay alert on top of the financial economic news. Have a good night, everybody. Peace.